Hi everyone, now we are going to present financial accounting and reporting for sole proprietor or partnership.
Assalamualaikum and hi everyone. Today I would like to introduce a company that we have chosen, which is Apparel. To begin with, the company's name is Apparel and it operates as a partnership business. Specifically, it is owned by Encik Wan Irfan Isharis bin Aziman and Encik Muhammad Amin Sharifuddin bin Aziz. Moving to its location, Apparel is situated in Bandar Baru Bani Selangor at Jalan 15/1A, Section 15. The strategic location helps the company to reach its customer easily. As for the capital, Apparel started with zero initial capital. This is because the company used a rolling system, which means that the earnings from current sale are reinvested back into the business to fund ongoing operations. Next, regarding their business activity, Apparel specializes in custom t-shirt printing service. In other words, they design, print, and produce t-shirts based on customer orders. One of the key strengths of the business is its fast service, where order can be completed in as fast as 3 days. Now, talking about operation hours, Apparel runs from Monday to Friday at 9:30 a.m. to 5:30 p.m. and the business is closed on Saturdays and Sundays. So, Apparel is a growing company with a clear focus on efficiency, customer satisfaction, and sustainable operations. With their rolling system and fast production, they have managed to establish a strong presence in the local t-shirt printing industry.
Today, I will be presenting the business characteristics of Apparel, which operates as a partnership business. Firstly, one of the main characters of a partnership is an unlimited liability. In Apparel, this means that both owners are personally responsible for the business debt. If the business faces financial problems and is unable to pay its obligations, the owner's personal money or assets can be used to settle those debts. Therefore, Apparel carries a high financial risk as both partners share full responsibility for any financial losses. Next, in partnership, the business capital is usually contributed by all partners. However, in Apparel, started with only zero initial capital. This is because the business uses a rolling system, also known as a rolling budget or rolling forecast, combined with zero-based budgeting. Instead of starting with large investment, the business reinvested early revenues back into operations. Funds from sales and small profits were continuously used to purchase stock and cover other operating expenses. Over time, this reinvestment process allowed Apparel to gradually build its capital and grow without requiring large upfront funding. Lastly, another important characteristic of a partnership is shared profit and loss. In Apparel, profits and losses are divided equally between the two partners based on their agreement. This means that both partners also share any losses incurred by the business. Such shared financial responsibility encourages strong commitment, cooperation, and teamwork, as both partners are equally involved in managing risks and making decisions. In conclusion, Apparel clearly demonstrates the key characteristics of a partnership business, including unlimited liability, shared capital, and shared profit and loss. These characteristics play an important role in shaping how the business operates and grows.
In this section, I will explain how Apparel classifies its business activities into assets, liabilities, expenses, revenue, and capital. Apparel owns several assets used in daily operations. Its non-current assets include one printing machine, computer equipment, furniture, and a delivery van. Current assets mainly consist of cash from daily sales, trade receivables, and minimal inventory due to outsourcing. As a partnership business, Apparel has unlimited liability. The company mainly incurs current liabilities such as payables to suppliers, staff salaries, and rental commitments. The business also has a loan which is classified into current and non-current portions based on the prepayment period. Apparel generates revenue mainly from custom shirt and jersey printing services. The business records an average monthly sales of around Rm100,000 ringgit, where revenue is earned by selling products at higher prices than supply costs. The most significant expense of Apparel is supply costs, as production is mainly outsourced. Other expenses include staff salaries, rental and utilities, with utility costs averaging below Rm200 per month. Last but not least, Apparel starts with minimal initial capital and operates using a rolling system. Customer payments are received in advance and used to finance production and operating activities, reducing the need for large capital investment.
This slide explains the recording process of the business operations. First, the customer places an order by providing details such as design, quantity, and size. Next, the company performs a price calculation based on the customer's requirements. After the price is confirmed, the customer makes an instant transfer only, as the business does not allow credit sales. The customer then sends the payment receipt as a proof of payment. Once the receipt is received, Apparel records the payment in the accounting records to ensure accurate financial reporting. After that, the order enters the processing queue for printing and preparation. Finally, the product is delivered to the customer, and the transaction is complete and closed.
Next is about business recording of transactions. First is sales summaries. Sales summaries are used to record total sales revenue from complete printing order. It helps the business to summarize all sales transactions on a daily and monthly basis, making it easier to monitor sales performance. Next is inventory report. The inventory report tracks the usage and balance of printing materials such as fabric and ink. This to ensure materials are well controlled and help prevent shortage. Moving on to bank reconciliation statement. Bank reconciliation statements are prepared to identify any difference between bank record and the company cash record, such as outstanding transfer or recording error. This process to make sure the accuracy of cash receipts. Lastly, profit and loss account. The profit and loss account summarizes total sales revenue and operating costs for the accounting period. It shows the gross profit and net profit. This is help the business to measure all profitability. This record to ensure accuracy, accountability, and effective financial control in the business.
One of the main strengths of the recording process is its ability to ensure accurate, complete, and reliable financial information. In Apparel, this process supports the accurate tracking of business transactions throughout its operations, allowing the business to prepare financial statements that truly reflect its financial positions and performance. Another strength is the use of source document as the basis for recording transactions. By relying on documents such as customer payment records, production cost records, and delivery documents, Apparel is able to minimize errors and ensure that every transaction is supported by proper evidence. In addition, the recording process in Apparel is systematic and well organized. Transactions are recorded in the appropriate accounts and classified according to their categories using consistent procedures. This structured approach reduces the risk of omissions and improves the reliability of financial information. Moreover, Apparel's recording process demonstrates strength through proper revenue recognition. Revenue is recorded only when it is earned in line with the accrual basis of accounting and the revenue recognition principle. For example, customer payments received before production begins are recorded as unearned revenue, which is recognized as a liability. This ensures that income is not overstated and that the financial statements present a true and fair view of the business. In conclusion, the strengths of Apparel's recording process lie in its accuracy, organization, and compliance with accounting principles, which support better financial control and decision making. In conclusion, the strengths of Apparel's recording process lie in its accuracy, organization, and compliance with accounting principles, which support better financial control and decision making.
Today, I will be explaining the weaknesses in Apparel's accounting recording process. There are several witnesses that can affect the accuracy and reliability of financial information. Firstly, human errors may occur during data entry and transaction recording. For instance, incorrect amounts, wrong account classification, or incomplete records can happen. Although transactions such as customer payments, production costs, and delivery record are supported by documents, mistakes may still occur due to workload pressure, carelessness, and lack of experience. Secondly, delays in recording transactions are another witness. This happens when source documents are not submitted on time or when transactions are recorded much later. High workload, insufficient staff in the work, and poor coordination between departments can cause this delay. As a result, this financial record may not accurately reflect the current financial position and performance of the business, which can affect management's ability to make timely and effective decisions.
In conclusion, as a clothing printing business, Apparel requires funds for fabric, printing materials, and machinery. A partnership allows the partners to combine capital, enabling the business to handle larger orders. Partners in Apparel can divide responsibility such as order management, production supervision, marketing, and accounting, improving operational efficiency. Each partner may contribute different skills such as design, printing operation, or financial management, enhancing the overall performance of the business. So this is our interview session with Encik Wan Irfan Isharis on 22 December 2025 using Google Meet.